Hello, today is the 22nd of April 2023. As always, we'll start with our disclaimer. We'll go over our calls, make some predictions, and because it's the weekend, we'll take a look at the long-term picture. This is my trading plan for Monday, which is April 24th. Please remember I can be wrong. Trade at your own risk. If you need to contact me, here's my web address. I've disabled comments on the channel. Look for the pattern with the early low on Friday, which is this, and Monday should have the early high. We had mixed signals after Thursday's trade. We used the mixed signals rules. I was expecting the most common thing, a gap and a prompt move outside the day's range. And even though the signals are mixed, I gave a number of reasons why we could trade higher. Well, it was obvious by the open we weren't going to have the gap, so we have to default to the next most common thing, which is to close the little change and have a big move the next day. The first part of that's happened. Closing up 3.73 points is closing the little change, and most commonly you're going to have a big move on Monday. Now, it doesn't always work, but it works far more often than it does not. These are the patterns I'm looking for next week. These are all the reasons I thought we could go up Friday. Going up 3.73 points doesn't cut the mustard for me. We could still save the day if we gap up smartly, but usually when these things fail, they fail in grand style. During the day on Friday, MEJT gave a signal here in the morning that we trade higher. There's a buy signal. Target was hit. MEJT said it was false and wouldn't stick. Retraced. Said this drop was false, wouldn't stick. Retraced. Said this drop was false or retraced. Said this rally was false. That's retraced. So that's already played out. This white line is Tom DeMark's TDST line, and the daily chart is resistance. This white line is his TDST line on the weekly chart. That's resistance. This yellow line is the 89-week moving average, and that's resistance. We're stalling at resistance. The longer-term picture is we've completed a big ABC down. The low of this bear market's in, and we're going to go up. But if we were going to go up without interruption, I'd like to count this as a five-wave structure. I can't count it as a five-wave structure. I actually can count it as a leading diagonal triangle without breaking any rules, so I can't say it's impossible, but it's too much fudging for me to make it obey the rules, and usually when you have to fudge, I just assume it's the wrong count. So at some point we should finish this blue B and have a blue C, which I don't think will undercut A, but even if it does briefly, it doesn't change anything. Also, when there's a spike like this at the low, that tends to be retested at some point. So at some point, I'm thinking we're going to have one more drop and then off to the races on the upside. Let's take a look at this last leg up. Friday, we broke through this channel here. The rule is on Thursday we drop two but not through the channel. When you have a break of the channel after a move like that, you either gap under it or the break won't hold. So we traded under it and the break didn't hold, but that just happens the first time and you're no longer obligated to gap to have a decline here. Now this count doesn't have magenta C and magenta A have a Fibonacci relationship to each other, but it's not the only count. This is a 65-minute chart, and according to this count, you have an A, a B, and a C, with C completing Wednesday of this week, equal to 50% of A. Doesn't make it the right count, but at least there is a count that says we've completed an ABC up. Let's look at what's happened since Wednesday's high. Well, here's a 5-minute chart. It's at least possible to count 5 waves down with good fibs. It's also possible to count an ABC up with good fibs. So it's at least possible we've completed wave 2, or at least wave A of 2. And what's worse is we stopped right at a 38.2% retrace of this whole decline. That doesn't mean we can't go higher. But usually, when you're dropping, you're going to retrace 61.8% when this wave ends. When you stop right at the 38.2, it usually means a bigger drop's coming. Of course, we don't know if we're going to stop here, but if we stop here, it certainly is compatible with us being in a big wave 3 down, particularly when this is 5 waves down and that's 3 waves up. If we stop here, that's not a good picture. It also isn't good that we had this big rally on Friday, couldn't close over any of the intraday highs. It's tough to reverse trends on Friday. People don't want to stand in front of trends before the weekend comes. And when you rally all day and can't accomplish much, you either make up for lost time by gapping up on Monday, or else you're going to drop. Now, gapping up isn't impossible because we have to add this failed target to the list. But usually MEJT is going to leave a failed target if you're going to have a reversal in trend. And if there's no failed target, I'm not certain the reversal in trend is going to happen. So this could fail. It already failed. We just might not print. This might be it. This might be the unsatisfied target before a trend reversal here. This is not a good picture, and we need to reverse it. We need to invalidate it promptly Monday, or else we're going to trade lower. Once again, I have personal business next week. I'm going to try to post every day. I don't know if I'll be able to. Monday's pattern has the early high. We could still get down. Typically, it's a bearish day with a final hour low. If it's strong, more strength should ensue. We had mixed signals after Thursday's trade and closed little change. Friday, the rules call for a big move, a high percentage of the time on Monday. We had a great opportunity for the rally. Friday, that opportunity was squandered. Gapping up smartly would save the day, but otherwise we should trade lower. When these things fail, they tend to fail big. Thursday's bearish pattern should have delivered more on the downside than it did. The drop from the news announcement should have been reversed quickly and completely, and it wasn't. It implies the drop wasn't due to the announcement, it was due to a weak market. The wave count, the sentiment indicators, all are compatible with the top. It's a pattern with the early high. The rules say you get sharply in the undesired direction, the call is kill, but if we don't do that, I'm looking for lower prices and perhaps much lower prices. And that's today's call.